According to Nedbank research, between the 2nd of October and the 2nd of November, foreign investors sold off South African bonds to the tune of 11.7 billion rand. This follows Finance Minister Malusi Gigaba warning that the country's debt would reach 61% of GDP by fiscal year 2021 to 2022. This caused investors to panic, selling out of SA capital assets, especially bonds.
You look at the state of the economy today, we're barely, growing at 1%. And next year is not even, promising as well, 1.5%, maybe 1.8%, if you're lucky. As an offshore investor, you look at the country and you look where opportunities lie.
If Standard Poors downgrades the country's local debt to junk, it will join Fitch, which did so in April, which will result in the mandatory sell-off of South African bonds by investors who have no authority to invest in junk assets. But it doesn't necessarily mean that South Africa won't have buyers for its bonds, although it will have to pay a higher interest rate for the privilege.
Let's say we do get the downgrade, they will be marked accordingly, and people that have the sole mandate of investing in junk bonds are going to come in and see opportunities. If it's a good opportunity and you can see that South Africa in the future is still going to be able to pay its coupon, it's worth the punt.
If further downgrades do happen, it will mean the increased sell-off of the rand. The sell-off means the local currency will become relatively weaker to other currencies. And because the country is heavily reliant on imports, it will mean the importation of inflation. Meaning only one thing: interest rate hikes. This in an economy struggling to gain growth momentum. Nompumelelo Ziba, SABC News, Johannesburg.